In this video, we're going to look through Bitcoin and total crypto market cap levels to determine where things could be going in the next 24 hours. We'll also look at bonds yields and so much more. Let's run the numbers. If you're new to our community, a very warm welcome and welcome back, CTKS family. We've seen that Bitcoin's gravity has pulled storage up, but storage is kind of a counter-trend mover and Tron is quite negative. So we're seeing some underpinning strength inside the crypto market. If you're liking the video so far, please smash that like button. In yesterday's video, Bitcoin was down here. It's currently 66,145. These price movements may look really random, but they're not actually random at all. They're bound by structural levels. I'll show you exactly what I mean. I'm just going to pop on the indicator. Knowing how to read structural levels is really important, and I might just put some values on these lines so you can see them more clearly. These lines are very special. They're drawn up through all of price history following two levels of standard certification. What we saw was Bitcoin just came up to this 69,778 level. It couldn't maintain it and convert it to structural support. Therefore, there was a negative fresh air gap down here. Negative fresh air is a very potential, well, it's a big problem because if price doesn't confirm as support, we can see that it can sell off quite dramatically. But where was it first initially caught? At the structural level of 68,156. You can see it undecided, retested, and made its way down. When you have a negative fresh air gap, expect follow through. And this is quite important. You need to get more and more safety nets under price. When you get those, and you can see down here at 66,118, there's a lot of structure that actually reverse Bitcoin's descent. So it's flattening out at the current time, but we need to see movements above 66,118 and upwards of around 67,519 to confirm a trend change. At the moment, things are basically flatlining. If we expect a bearish case scenario, we would expect underside retests on that 66,118 level, moving down from 65,662 and downwards across that 65,097 mark. If we're expecting a bullish case, and there is quite a lot of support, we're seeing the potential that we could start to turn around and retest that 66,448 and the 66,961. The favoring is actually on a bullish case just at the current time, and it depends what time zone you're in and when you watch this video. When trading and investing, it's very important to know where the structural levels are because they determine price waves. We saw recently as Bitcoin came down, it found structural support and it flatlined. This is exactly what we would anticipate Bitcoin doing. It's starting to cut over, which means there is a degree of positive momentum inside the market, but that will either be confirmed or denied by the Tier 1, Tier 2, and Tier 3 charts. This is why it's so important to do the cheat sheet each and every day. Even if you're just looking through the structural levels of these particular charts, it's going to open up a whole new world to you. As you learn technical analysis, many people will say all you need to do is look back on recent indicative price or RIP. And it's called RIP for a reason because that's what it will do to your money. Make sure that you draw to the price as it is currently. For example, the price it is now, which is on total crypto market cap at 2.329 trillion. Just draw your analysis to here. But what about when it's here? Oh yeah, just draw your analysis to there. But what about when it's there? Ah yeah, draw your analysis to there. You can see why the entire finance market is full of stories because they're not marking up their charts in a statistically significant manner. What you want to do instead is ignore the hell out of current price. And you just say, price, you're just going between structural levels. So where are they? Let's pop on the indicator. Aha, now we see something really rather interesting. Just above this $2.358 trillion mark, the entire crypto market came into the 2.41. structural resistance level. And you remember what Bitcoin was doing? Bitcoin was stuck under that structure. It had a negative fresh air gap, just like Total. Remember, Bitcoin bounced here and Total bounced there. But it was only until Bitcoin found structural support that we were okay. Now, what is occurring inside this structure at the current time? Well, it's weak. And you remember the Bitcoin structure is somewhat stronger. Now, why is that the case? Because when you get big sell-offs like this inside the crypto market, there's a flight to safety to Bitcoin. Once Bitcoin turns around and proves itself, the alts will join the party. But you can see here, there's not just one level of structure inside the market. There are many, many levels. And here we've marked up total crypto market cap with level 1 and level 2 standard certification for in excess of 3,700 days. What is this specifically telling us? We're under structural resistance in terms of the total crypto market cap, or right across the crypto universe. Now, what does that mean? It means the alts have bled out, whilst Bitcoin is starting to consolidate above structural support. You can see it more clearly here as Bitcoin just did its swan dive down into structural support levels, and it's literally like a trampoline. As Beardy said, you need a lot of them to stop when price just cascades down. Of course, you're going through safety net after safety net until you start to bottom out. Now, what have we noticed with Bitcoin? It struck the 66,118 structural levels, and these are quite strong. Also, the 65,662 level is quite strong. We can see that we might be actually starting to see a bit of a recovery in Bitcoin, but this would not be picked up by the mainstream press or media. Why not? Because the mainstream press and media just says, market down, give negative story, market up, give story, going to the moon. And yes, that's how they speak. We're completely different inside our community. We just look at the structural levels and we know that structure contains price. It's always moving from structural level to structural level. If we understand this, you can actually print money just like the Fed. And congratulations to everybody that picked up on the concept that you don't need to create big percentages to get big percentages. So I'll give you a little bit of a math problem, which is not so much a math problem, but money in your pocket issue. If you turn 1% trades 10 times per day, how much would you have at the end of the day if you use the same money? It is literally not a trick question, and just ignore any brokerage fees or anything like that. So if you did 10 trades and you got 1% each trade, and you're just using a constant amount of money, a constant position size, after those 10 trades netting you 1% per trade, how many percent profit did you make after those 10 trades? I'm really looking forward to your answers in the comments. If you're new to our global family, a very warm welcome. If you head over to CTKSMethod.org and you just scroll down a little bit, I share some of my trades that I do there from the YouTube videos. So this gives you a bit of an understanding of what you can actually do. And if you would like the indicators that I use to do these trades, they're available through the CTKS Method service. Or you can draw the lines yourself through the 2 levels of standard certification. You can just think about it like this. When price was absolutely plummeting through all of these levels, people would say, it's all over. The GFC, the Great Depression is here. And just be aware, when price does that, you have no shortage of social media influencers just jumping on the bandwagon and saying, the end is nigh, it's all over. Oh, hang on, what happened? Why is it going flat? They don't understand where the structure is inside the markets. Having been inside financial markets for nearly 4 decades, I can tell you, I used to listen to those people, and being a gold trader, I wanted to, because gold loves bad news. But the problem is, if you hear all this bad news, you'll never get into the market. And of course, the problem is when you hear good news, you'll jump into the market and you'll get caught on the wrong side of the trade. What you will find as price is coming down, so long as you're accumulating near structural levels, structural support, and you know how to read these levels as well. You just don't want to do it blindly. You want to know what you're doing. You're actually in the safest place that you could be. This is very counterintuitive, but it's absolutely correct. So far, we've looked at the CTKS structure on Bitcoin and total crypto market cap, and these two guys, they're best friends. They hang out together. You can see that Bitcoin influenced total crypto market cap, but sometimes total crypto market cap actually influences Bitcoin. They take turns. And what Bitcoin is doing and what total crypto market is doing will impact all of the alts. So it's very important to understand what is happening with total crypto market cap and Bitcoin. Also, the structural levels are available for all the Tier 1, Tier 2, and Tier 3 charts. And as a bonus, you've got 5 more in there. In yesterday's video, Solana was just around here, currently is trading at 181 and 59 cents. When we go back and look at that upsurge, you remember what was happening with Bitcoin and total crypto market cap, and then that negative fresh air gap on Bitcoin and also total. This is how you read between the charts. You want to keep in mind total crypto market cap and Bitcoin structural levels as they play out on your favorite alts. Now, we were just there, and what happened to Solana? We've seen it start to base around, to start to turn around. Solana is an incredibly strong project. To get our X-ray vision on where the actual support and resistance levels are, let's just pop on the indicator, or you could just mark up your chart yourself with level 1 and level 2 standard certification. Okay, let's just save that time and pop on the indicator. We can see a very similar thing playing out. Overhead structural resistance, a negative fresh air gap, finding structural support but under it, but there's another level of structure here. I'll just put on the indicator values for you. We know that if Bitcoin starts to improve in value, we can get across this 182.57 line, and that's a really key line for Solana to get across. By the way, these lines are called SLs, or Stanfield levels. You'll notice that some are thicker and some are thinner. When you get a positive fresh air gap, that's exactly what it is. It means the price can just go nuts. It can go up, but it can sure as heck come down as well. So you need to be really aware of that. Positive fresh air gap with a consolidation above structural resistance means higher prices. But if it can't get above, it's going down below to the structural levels. Even if it really sells down hard, you just get caught by a couple of structural levels and that will hold price. But you need to know where they are. That's the key. Solana is currently 181 and 30 cents, and you can see that these lines are rightward looking. What does that mean? It's pretty cool. It means that this is a structural support level, and if it goes under, it's a structural resistance level. This is how support and resistance levels actually work. And just remember how fast it was coming down, but it started to base and then lost the structure and went down to that 179.54. But this is structural support and it didn't follow through, which meant it was going back to the 182.57 mark. But it couldn't confirm it here, it couldn't confirm it there. That meant it's on the way back to 179.54. Just giving a little bit of an indication, from down here, this structural level to up here is about 1.62%, and you can see that you can cycle your money in and out. Get a sell, of course, you could go a little bit over or you could go a little bit under. That's not realistically important. What's important is that these structural levels, they're phenomenal. And when you learn how to use them, the whole world of trading and investing will open up to you. It's really important to keep your eye, especially on the Bitcoin structural levels, because it will follow through to what the alts do. If Bitcoin is coming down, the alts are coming down. If Bitcoin is going up, the alts will be going up. Sometimes we get divergences, and we saw XRP absolutely go nuts and do an inversion yesterday. Binance coin is inverting today, which means it's simply overstating the upward pressure and understating the downward pressure. That's it. That's how they go. And what are we seeing with Bitcoin Cash? Just following Bitcoin's gravity. We saw a little bit of a rotation out of Solana into Ethereum, but just bear in mind, Solana is really, really strong. And Solana is starting to show signs of life, and potentially much more than Ethereum. You get capital rotation all the time, and you just got to keep your eye on the market to determine where it's occurring. Just something that I've noticed, XRP and ADA seem to lead the charge out of the gate, and seeing XRP come up is a really good thing. ADA is coming up as well. When Binance Coin comes up, it means that confidence is getting restored in centralized exchanges, and that could point to a turnaround in prices. That's another positive. A lot of people currently are getting freaked out by the increase of the VIX, and a lot of people are just milking this thing for all they can get. It's going to be the greatest recession since 1929, the Great Depression. Oh, what a lot of rubbish. Oh, Ken, why do you say that? Because yes, fear is increasing, but at the same time, they have tools at their disposal to stop these types of crashes, like the 1929 crash. And what have we seen in the DXY, which is currently 104.40.60? We've seen it break underneath structural support and turn it into resistance. We would expect a movement down, which is in another way fueling crypto's rise up. And we can see that there's a negative fresh air gap. We could see the DXY tomorrow around 104.1200. If we expect a bullish case, we would be looking at the DXY going up to around 104.7000. Currently, the US 10-year yield has tested that 4.1540% and it's resumed down. And it's got a structural resistance level at 4.15%. You can see, just like the DXY, there's negative price momentum on the yield, especially the 10-year yield. This basically means that if the DXY comes down, we would expect the yields to come down with it and crypto to rally. If this turns around and we find structural support, we would expect the opposite. Keep your eyes on the structural levels. With the expectation of upcoming rate cuts, we can see that the US 2-year yield has been going down, and we would expect that. We anticipate that because when the yields go down, it just points to DXY weakness. Also, keep your eye on the futures. When you look at this blue line, that is Bitcoin. And you can see the blue line is just realistically following the futures. If the futures come down, we would expect negative price momentum on Bitcoin and therefore crypto. But we're seeing the futures inside the stock market starting to base and turn around. No wonder we're starting to see a base inside crypto. So we've got a few things that are pointing the probabilities towards increasing prices in the crypto market. But yet so many negative people are out there on social media calling for the end of the world, just like they always do. For positive price momentum inside the crypto market, we want to see the DXY just keep on making its way down, the yields making its way down. That will put positive price momentum into precious metals such as gold and silver, and also Bitcoin. And we notice there can be quite a few lags in between Bitcoin, digital gold, and the actual real gold. This spike in gold is measuring geopolitical tension, and there is things afoot on the war front. But also bear in mind, the futures play a really big part of what is occurring. So if the futures continue to make their way down, that's something to look at. And all of those major indices, the values of those SLs are inside CTKSMethod.org, so go and check them out. If you want to be successful trading and investing, please treat every day just as a structural day. If you see, I'm just going to zoom in here. If you see structural support holding price and getting over structural resistance levels, it's a positive day. Don't worry about what the news says. The news is always negative or crazy positive by nature. The news will always wrong-foot you. Instead of looking at the news, look at the structural levels. That's what's going to actually tell you what price is realistically doing. If it gets above a level of structural resistance, it's heading to the next one. If it's got a lot of structural support below it, that means it favors a movement up. But it's got to get through these structural levels to confirm a resistance level as a support level. And that's not the certainty most people want. Most people want to know, oh, is it going up or is it going down? Well, it depends on what time zone you're in. It could be going up here, but if you're in this time zone, it's been coming down. But if you're in another time zone, it's been going up. It realistically depends on when you watch. But overall, there is extreme bullish momentum inside Bitcoin and therefore crypto. Don't get shaken out. Because you've made it this far, you're an absolute legend, and I thought we could talk about structural levels or SLs today. It's a really good thing to chat about. It will help clarify their role and importance. And of course, SLs mean Stanfield levels, not stop losses. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.